In this video, traders, we're going to look at how do you stop getting paralyzed by losses in the market. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so how do you stop getting paralyzed by losses? We've all been there, whether we are a day trader, a swing trader, or even an investor. You know, we as humans do not like losses, and very often you'll have that loss, and some people suffer from deer in headlights syndrome. I don't want to take the loss. If I take the loss, it crystallizes the loss. It almost cements that feeling that I've got of I don't want this, it's hurting my account. And then you have all these silly sayings that go around and say, well, if you don't take a loss, it doesn't count as a loss yet. It's not a loss until you take it. It's a loss. It doesn't matter whether you take it or not, it's still a loss. So how do we stop getting paralyzed by the fear of crystallizing that loss? Some of the things I've got for you here, as always guys, comments in the comment section below, add your own flavor, helps other people who are watching the video, gives me some ideas as well for myself to do more videos for you guys, maybe go down different avenues, different paths, and it's just a good thing. So appreciate all your comments as usual. Okay, so first thing is truly understand and accept the risk. I truly believe that many people get paralyzed by losses because they don't expect a loss. So they might have a trade on, they might have a position size on, market moves against them, and they look at their P&L and they go, oh, ouch, I didn't realize I'd be down that much. And they almost get caught out by it. They almost go, you know what, I didn't really expect that kind of loss. I didn't really think that would happen, and this is not really what I wanted. I didn't want to lose as much. And really that just comes down to kind of looking at the trade or the deal beforehand and going, right, this is what it is, this is the size, and this is how much I could lose. Am I comfortable with that? No. Right, dial down the size. Am I comfortable with that? Yes. And it's accepting it, understanding it, seeing where the risk is coming from, and truly accepting it, I think is the big thing. There is going to be risk in the trade. It might not work out for you. The second thing is, I mean, these are all very similar, but the second thing is to think of all possible outcomes. So I think as well, along the same kind of theme, we don't expect it. We don't think, oh, the market just gapped down on me overnight, or some surprise news came out, or I was intraday trading and a tweet came out from Donald Trump that just ripped it and I didn't have a stop in. Whatever it may be, we don't expect, or we don't understand and think of all the possible outcomes. I think again, this helps us to really come to terms with the possibility of loss, and then also adjust the position size to suit. So what are the outcomes? The outcomes could be, you're not talking about every single little iteration here. It goes up by 10 ticks and back 50. No, it goes in a straight line, you're long, great. It goes up to my level and comes back. It goes straight down, it gaps down, it hangs around, does nothing. It goes a little bit against me, goes in. All these kind of iterations, you have to go crazy, but then it just gives you an idea of how you're going to manage it. And it's also good, guys, from a trade management perspective as well. You know, if the trade goes in your favor, gets halfway there, starts to stagnate and drift back lower, what are you going to do? You're going to cut some of the position, you're going to tighten the stop up, are you going to put an entry to buy more above the prior high? What are you going to do? So again, this planning really helps in every situation, you know, in every single situation. You know yourself, guys, in life, you know, if you're planning something, it's far easier than it is if you're not planning stuff. Now, things don't always go to plan, of course, but it gives you an idea that, you know, I've got a rough idea, rough roadmap of where I'm going to go. I mean, if you're going on a long journey by car, sure, we've got sat nav and stuff now in the vehicle, but forget about that. If you just had a plan and go, right, well, I'm going to go, you know, M6, M1, M25, junction 4, this, that, the other, whatever it may be, you've got a rough idea in your head and you've got a decent plan of where you're going. So you're not surprised, you know, when you get there. And I guess a similarity could be, you know, if we're preparing and understanding and accepting risk, like the great analogy is a car journey. Like, you accept there might well be some sort of traffic accident. There might be some sort of roadworks. There might just be heavy traffic that means that, you know, the last 30 of journey is very, very slow. And we don't want it, we don't enjoy it, but we accept it's going to be there. And we don't go crazy and get paralyzed and do nothing. We just continue with the plan if that happens. So the third thing, guys, is to devise a plan of action for all those outcomes. So once we have got those possible outcomes, we're thinking about exactly what we're going to do under those circumstances. It goes against you very, very quickly. I'm going to cut it. I'm going to cut half to give me some thinking time. You know, and thinking about this in the kind of cold light of day when you haven't got a position on is so much easier as well. So the fourth thing here, guys, is to mentally rehearse taking losses. This might seem like a little bit weird and a bit crazy, but I think if you are struggling to take those losses and it's damaging to your account, which most likely it's going to be because they get worse and worse and worse, and you want to really get out of a trade as quick as possible, forget about it, learn from it and move on. Rehearsing taking the losses is just like thinking, okay, imagine that the price has gone against me, it's not doing so well, it really needs to be cut it. And just practicing that in your mind, because studies have shown that mental practice and mentally rehearsing something is very beneficial, almost as beneficial as actually doing it in the real world, so to speak. So it sounds crazy, but if you've got a real problem with it, how long is it going to take you to mentally rehearse, taking a loss and trying to, force that habit or try to program, that habit? And I guess, it's very similar with this. Is very similar. Program your brain to expect losses. Will be programming your brain to take the loss, to not hesitate when you need to be able to pull the trigger and click the mouse, open the deal ticket and close the position. And program your brain to expect losses. So, just like the analogy, with the car journey, you're going to have losses. And, why we get paralyzed is we don't expect it, we don't want it. We didn't realize it was going to be that much, and we don't really want it crystallized in our P&L. If we kind of reprogram our mind to say, listen, the loss is going to come, the big winner's going to come, the loser's going to come, small winners are going to come, small losers are going to come. How do we deal with it? And understanding it's part of the game. And I think that we have this illusion that we're going to be able to, make money every single trade, because that's what we really, really like secretly, but it never, ever, ever will be that way. And so as long as we program our mind and say, listen, this isn't a problem. This doesn't affect where I want to be in 6 months, 1 year, 6 years time as a trader. This is just part of the game. However, if I don't accept it and I don't take the loss and I end up getting paralyzed, then it will impact where I'm going to be 6 months, 12 months, 18 months, 2 years, whatever it may be. All right, guys, those are 5 things for you to stop getting paralyzed by losses in your trading or your investing. Take care and see you in the next one. Bye-bye.